Well, good afternoon, everyone. This is Terry Luker with DealTalk, and man, are we excited this afternoon to have Bob Baker with us. And Bob, we appreciate you being here with us with the Baker-Garrington Group. So thank you for joining us this afternoon.
Thanks for having us. It's wonderful to be here.
Well, we appreciate it. And for those that may not know, and I would think that everybody knows now, but the Baker-Garrington Group is the co-sponsor of this year's Commercial Loan Broker Association's Convention and Expo down in Orlando on October the 27th, 28th, and 29th. So we are so excited to have you back partnering with us again this year with the CLBA.
Well, it was such a great time last year, and conferences are hit and miss, and yours was one where we really felt it was worth the money, even as a sponsor. So we wanted to do it 2 years in a row and keep the momentum going.
Well, we certainly appreciate it, and having your support is a big, big deal for us. And so we certainly hope that the brokers out there are making their reservations and signing up to be a part of the convention and expo in October. And we're hoping all the sponsors, that are thinking about attending or making those decisions. I think Scotty's down to 5 remaining tables, and then we're completely sold out. So we certainly appreciate your participation in it and your willingness to co-host it with us. It's really great to have a great partner, so we appreciate that. I really want to jump right in if I can, because there's a lot here to talk about with your company. And the first thing I'd like to do is kind of start from the beginning, and just ask, Bob, what was the vision behind Baker-Garrington Capital Corp when it was first launched?
It's interesting because when Baker-Garrington Capital was first launched, I was actually in my early 20s with little boys at home, and failure really wasn't an option. And I was an entrepreneur, so I went searching for financing, and it was recommended to me for my need to use factoring. I had no idea what factoring was. And I really had a very poor experience. And I don't really want to go down the road of the poor experience, but I would love to say that it turned me more into a mode of looking for a factoring company that did things the way that I thought it was going to be when I used it. And more importantly, I wanted to be part of that. So Liquid Capital was where I started, and Liquid Capital was a franchise. And the franchise was key because being a young man with a wife and kids at home, setting up a back office and having all of the funds to be able to do that was tough. So the transition then from Liquid Capital to Baker-Garrington was really seamless because when my franchise became due for renewal, I just didn't want to be a franchise any longer because I wanted to be able to offer so many more things and more competitive and so on and so forth. So the ownership of Garrington and I did a merger, so to speak, or a JV, and here we are as Baker-Garrington.
Well, that's outstanding. Now, since its inception, Baker-Garrington has deployed over $1.76 billion across the United States and Canada. What do you think has been responsible, or what do you think has fueled that kind of growth?
I really believe that it's people expect factoring to be the way it was when I used it and was sick to my stomach as a young man, thinking I would lose my business. That some people, they say traditional factoring can be compared to the mob in how that it's run. And I don't know that that's a true comparison, but I will say that we have taken the traditional model and just made it to where I felt it should be to actually promote a business. The easiest way to explain that in a nutshell is that most everything that is decided on how much you factor and when you factor is decided during contracts and those kind of things. Whereas with us, it's decided in our client's office each month of what they need rather than what my contracts say they need to do.
Right, okay.
I feel that message is going somewhere. The education part of the CLBA has really enhanced us to focus more on the education because of that's your position, and it's worked out extremely well for us.
That's interesting. I'm hearing that from some of our SBA lending partners too, that they're getting brokers that are better informed, that are asking more questions, and also the education piece of our entire industry, I think, is important. But let me ask you this: looking back, what milestones kind of stand out to you as pivotal, pivotal to your company's trajectory?
I really believe that in the beginning, for a broker or just a business development officer within a factoring company or any financial products, it's a hard sell. Alternative finance is something that most businesses need, but none of them really want because of a higher cost than a bank and those sorts of things. And in the early days, I worked with some people that started out with one or two jobs being run, whatever the industry was, and they worked out of a spare bedroom in their home.
Right.
And through our financing, in just a few short years, they were a 30 or $40 million a year company. And that is really what changed the trajectory, because that is what gave us purpose and the desire to do this every day, is seeing those types of being part of people's dreams coming true because of what we do. And so we've taken that philosophy ever since and stuck with it.
Yeah, and it seems to be working for you, right?
Well, it our message that flexibility and that you should be able to choose your financing on a weekly and monthly basis, it's definitely resonating, and we love the message.
Yeah. So I know that Baker-Garrington is a family of companies, and so it has a lot of synergy. So it's part of a family of companies. Can you walk us through what that really looks like?
Sure. There's a couple gentlemen, Tori Stewart and Robert Anton, amongst a few other partners of theirs, that have been extremely successful in starting financial companies, from private credit all the way through to different types of investments and tax strategy type investments and all these things. And those companies are primarily Next Edge and the Garrington group of companies. But Garrington has also expanded. They're a major lender as well. In fact, they're much larger than Baker-Garrington. I like to say that Baker-Garrington will do everything from 0 to 20 or 30 million, and do much more than money with all the service and the other add-ons. Whereas Garrington is the exact same message, but they kind of pick up where we leave off and go to the 30, 40, and 50 million. But they will do other things as well. In addition to larger scale factory, they do a lot of ABL, a lot of lend-to-lenders, a lot of different things like that. So we are one group of companies: Baker-Garrington, Garrington, Liquid Capital, On the Go Fuel. We have software companies. But even though we're all independent companies, we all have sales meetings together. We all have the same service philosophy. And from top to bottom, we complement each other.
Okay. So that's kind of a moves into my next question would be how do the different companies complement each other? But it sounds almost like they interchange, they interact with each other.
They really do. And the real neat thing is I can work with a company that maybe does 1 million a year. And in 2 or 3 years, between their perseverance as an entrepreneur and our fueling growth and back office, they get to where they're, say, a 20 or $30 million company. They may have also gained sophistication in their back office. They may be ready to graduate from one product to another that may be cheaper or more cost effective or serve them better. And that's the beautiful thing about it, is that we offer products from all the way at the smallest level of a startup all the way up to very sophisticated public companies. So we do completely complement each other. The other
Yeah.
thing that we do is, just because I'm a factor does not mean the factoring is all that I do. I do a lot of short term notes for my clients. I do a lot of equipment for my clients that use us as factoring. And I also have a fuel card company with some partners that we work with and offer those products as well. And it overlaps. Those products go to the liquid capital front as well.
So that's kind of how it kind of becomes, all the companies become part of a larger ecosystem, if you will, at Baker-Garrington. Is that fair to say?
100%. You bet.
Yeah, so that's outstanding. So let's talk a little bit about the client impact and the marketing position. You've worked with entrepreneurs and emerging businesses across, I think it's 39 states that you do business in the
That
United
might have
States.
been a typo when I sent in the information because in the US it's all states.
Okay, so you're doing all 50 states in the United States, and you're doing some of the Canadian provinces as well.
That is correct. We do both north and south of the border with all products.
Okay, and so what kind of clients are you helping the most right now? What are you seeing out there right now?
Typically across the last 15 or 16 years of Liquid Capital and Baker-Garrington of our existence, we've always been extremely heavy in oil and gas. And that's mostly just because of my connection to it. And I have a lot of connections in those areas. So it becomes, in a salesman's standpoint, the low hanging fruit. The thing for us, though, is we're really industry agnostic because as long as the contracts and the paperwork and different things fit for a factory product, we find a solution and we work with most any industry. Right now, today, oil and gas has slowing down a little bit. We're still signing clients each and every month in oil and gas, but it's just not what we're used to. So right now, we're seeing a big uptake or uptick, apologies, in staffing in the gig worker space. The gig worker space is just exploding in the U.S., and we've been just blessed to be able to get a great start in it. And we love the growth we're seeing there.
Yeah. Well, how about this? Can you share a success story where your firm, Baker-Garrington's flexible capital solution, made a significant difference for the client?
Absolutely. I'm going to go to a client that is just has a fantastic business right now and actually came back and just started with us again this week. But the reason I would pick on this particular company is because they came to me probably back in 2012 or 13, and they had all kinds of work but just couldn't afford to pay to grow their trucking fleet to be able to keep up with the work that their customer was asking for. And they
Right.
knew that if they didn't get the number of trucks, that they're actually located in the oil fields on a Native American reservation. So they're tier one contractors. And this contractor knew that if he couldn't self fulfill or self perform the work, that it would just go to a different tier one. He wasn't going to have the option of supplying half. So
Right.
we really pulled some strings and had a lot of in-house meetings because we weren't familiar with the sovereign nation. We weren't familiar with even the E&Ps in the oil industry, how they operated in a sovereign nation. But we were able to pull it together and do multi-million dollars worth of financing within weeks for a gentleman that had nothing. He sat in his spare bedroom.
Wow.
And it was a wonderful company that grew and grew and grew. It grew to the point where this company called me up one day and he says, Bob, over the last couple of years, you've gotten to be a great friend. So this is a hard conversation, but I don't need you anymore. I have plenty of money in the bank. I just don't need you.
Yeah.
So how do I get out of this? I've heard that's the biggest horror story in factory. And I said, it's not for us. You continue to send us all your invoices. We'll continue to enter them into open invoice for you, for your customer, like we always have. The difference, though, we won't factor them or advance money. But as the money comes in and pays off your invoices, the balance I'm owed just drops significantly as we go. When it hits zero, I'll send a release and you're free to go. No harm done, no issues at all. Well, what happened is it took a couple months. He had almost a $2 million balance. So it took a couple months to get enough checks in for those particular invoices. And he called me up one day and said, "How do I start again?" And we weren't fully paid out. And I said, "Why would you want to do that?" And he said, "Quite frankly, I've hired 2 full-time gals that are experienced in this. Full
Yeah.
benefits and good wages. And I've added it up. Their wages and benefits will be a lot more than your costs of financing. And they can't keep up entering my tickets into open invoice. We have to go back to you just for that service. Even if I
Hmm.
don't need the money, your service pays for or saves me more than what I can hire it done myself." So it
Yeah.
was just really a cool thing. And to think that over 10 years later, he's still with us and doing terrific. And we enter so many tickets for them that I just can't imagine it doesn't help his bottom line. Not to mention, we say we'll have it done in a certain period of time, which really gets those days outstanding clicking off.
Yeah, the next question I have is kind of moot, but I'm going to ask it anyway. The question I have for you is, how does your approach differ from traditional financing sources like banks? And you kind of just laid it out there, that your service, was less expensive than 2 full-time employees that he had. But what are some of the other ways that maybe your services are different from traditional financing sources like a bank?
To be very honest, I have to go back to where I'm a broken record on most everything I do in marketing because it's something I'm just so passionate about because I could have lost my business as a young man with young kids and not be sitting here talking to you. But
Right.
what I'm getting at is this. If this month your small business, it doesn't matter if you're doing 1 million a month or 1 million a year or 50 million a year, it's your baby. You should be able to manage your baby the way you feel and your staff feel is best for that business to be successful.
Hmm.
So if I give you a $5 million facility size for a factory limit, there's almost no businesses that need to factor everything all the time or every invoice 100% of the time. So
Right.
you should be able to pick and choose what you want to factor. But we take it to a different level when we visit with our prospects and we tell them, why would we want this so passionately for you? Simple. Because if this month all you have to do is make payroll and growth is slow, you factor only enough to make payroll because you don't
Hmm.
want extra dollars sitting in your bank drawing a financing cost. But at the same token, if next month huge growth is coming, you need to add employees, training, whatever it might be, factor everything you can get your hands on to be able to afford the growth. Knowing that the following month you can cut it in half or go all the way back to just factoring what you need for labor. Because if you can't manage your business that way, you're really not getting ahead the way you should be.
Right.
I have not seen any other factors that are willing to cut their income by explaining to people how to use it. And I've said for years, maybe I don't make as much as many other factors, but what I do think that I have that most don't, I have a lot of clients that have been with us for 10 years straight. And
Yeah.
the national average is about 24 months for someone to use a factoring company. So I'm proud of the fact that our counseling on how to use it, but just as important, our service offering is equal to the money offering.
Yeah, that's fantastic. I think a lot of times, when we're talking with business owners and like you, we have clients that have been with us for, over a decade, and three off the top of the bat right away I could name them because they've become friends, like you said. They're no longer just clients; they become friends and people that are a part of our lives. And so I think that's important, and I think the work that you're doing, and I think part of what sets you apart is what you just explained. That you're telling your clients, don't do it all, just do what you need. Whereas all the other companies are saying, no, 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 you need to do it all. They want to make all those dollars. So talk to me for just a second about the future and the vision that you see, I mean, obviously you're one of the fastest growing capital providers in North America. Where do you see Baker-Garrington, heading to in the next 5 to 10 years?
I really feel like we're both Garrington Group of Companies and Baker-Garrington. I feel that we have positioned ourselves really, really well for the fourth quarter to close out this year really well. A lot of companies have struggled the first two quarters, and I feel like we're in a position to really change that in the fourth quarter. But as far as the economy and the future of our industry, I actually feel that it's got nowhere to go but up. And I feel that because of a lot of different reasons. People are starting to learn that alternative financing is not what it used to be. That
Right.
this is my model that I just explained to you, but there's a lot of other companies that are making models that are more client friendly as well. I'm not the only one. I'm the only one that I know of in factoring, but I know of a dozen in other products that are right alongside factoring, some of which you can use in conjunction. And I feel that as the economy is uncertain going forward, we're still not completely sure what the tariffs are going to do. We're not completely sure on oil and gas where things are going to head. So even though those industries are still a little bit in flux of where are we headed,
Right.
I feel that the finance industry, because of the education that we're doing and the education that companies like yourself are doing, I
Hmm.
think that the alternative industry is going to be extra strong because I feel like it's also competitive to where companies can really make money. They're not doing it to grow a business and break even any longer or build a brand. They can
Right.
do these things and make money from the start. So I really am very optimistic.
Well, what do you think are some of the new opportunities you see that might excite you as your company, grows and expands a little bit? And what about innovation? What roles do you maybe see AI playing, in the future of your company too?
I think that going forward, AI is going to be a big part of it. It already is.
Yeah.
Um, I'm a little bit old school and maybe even a little bit redneck or country boy type of a person. So for me, redneck polishes my wording a little too much, but I
Yeah.
definitely use it and it helps me. I see where in the industry we're able to do things quicker, faster, smoother to get our results. In some cases, we used to have to wait 48 hours to be able to have a real good client introduction call for underwriting because we just really wanted information first. Whereas now, in some cases, in a few hours, and in other cases, in 12 or 24, we have all the same data that took us, sometimes a day or two longer. And this is only going to get better and better. I'm already getting emails dozens a day of companies that have developed AI products for financial companies like myself, be it if it's to support underwriting or back office or risk management, it really doesn't matter. They're popping up all over.
Yeah.
I think we're all going to have to look at it because the future is faster. And whether us old fashioned guys like it or not, faster is the way of the world.
Yeah, I think it's interesting. We talk about AI, and in our firm, we're investing heavily into it, and you're going to see that in the CLBA. We'll have a little taste of it at this convention, but we're going to roll out a system that's basically going to allow a broker to upload a deal, and once they upload all the correct documents and all, it will actually provide them a term sheet. Will tell, or not a term sheet. I'm sorry, a credit memorandum, and then it will tell them what the strengths are of their deal and what the weaknesses are of their deal and some things they should work on before they finally submit the deal. So we're really excited about where it's headed, but all this talk about it ultimately replacing all of us, I don't believe that. I think that you
No.
still have to have that human touch.
It's interesting you say that. I had a call this morning with our marketing crew from across the entire group of companies and the sales force. And the only thing I really added to the smart people was that regardless how much of this we give up control on, our sales staff still has to proof the message and proof
Hmm.
how the message is put out there. Because I just feel like AI is advancing us all for the better. However, we still have to make sure AI is going in the direction of the message we want to put out there.
Yeah. Well, in closing, I want to I want to ask you two things. One is the first thing would be kind of a personal note. What excites you the most about being on this part of Garrington's journey?
You know, I'm so blessed. And the reason I'm blessed, I was torn on one of your earlier questions about what changed the trajectory.
Yeah.
And what really changed the trajectory was the fact that I showed a little success, so they believed in me. And at the same time, I showed a little success back in 2012 or 13. We had a sit down and we came up with an agreement from a financial standpoint. Because back in those days, I didn't have anything. I had my ability to go and sell, and I didn't have much else. And Garrington believed in me to back me so that I could do something that a lot of young guys that owned a factory company couldn't. And that
Right.
is, I could go out in the marketplace and say there's no deal too big or too small. I have this company that believes in me and believes in our product. So funding and size of fundings was something I never had to worry about. I never had to worry about running out of money. I was able to go sell and promote businesses and not worry about, is their growth going to be too much and we can't afford it. I
Yeah.
was blessed that I didn't have to worry about those things. And when you can go sell a philosophy that grows businesses and don't have to worry about running out of cash to support those businesses, the game changes in your confidence in how you sell.
Yeah.
And so, is it the money or is it just the fact that Garrington believed in me? That would be my take, because the money came right behind it for good paper that I wrote. It still has to be good paper and that sort of thing.
Sure.
You know, that was the biggest thing that I'm excited for, is that I can go help people and don't have to tell them that I'm limited.
Yeah. Yeah, I think that's so true. I know in our own company, we were able to close a big warehouse facility this year, and in this recently, and it's made a huge difference in our whole mentality,
Yep.
of what we can do. So I want a final thought here, and I want you to let me ask you this: if you could leave entrepreneurs and business owners with one takeaway about alternative financing, what would that be?
Without a doubt, it would be learn how the contracts affect your decision making going forward. There's nothing I can say that a lot of things that factors can do can help or hurt or ruin a business. And it's, when do you cut them off? When do you not? When do you run out of credit? When do you, all these things that can be negative.
Mm-hmm.
How we use those negative things is the issue. So make sure that anybody out there that would consider alternative financing, I suggest it all day long. It's a great product nowadays. But make
Yeah.
sure you read the contracts, make sure you understand what they limit your abilities to, and ask questions and ask for references of current clients. Those are the
Yeah.
things I would tell people, because there was a time when I would be scared of people asking me those questions.
Mm-hmm.
Today, I want people to ask myself and every finance company those same questions, because everybody isn't equal in the contracts.
That's right.
And it affects everyone's business because it affects your decision making to run your business.
Yeah, it really does. Well, Bob, I want to thank you. It's been, a great time visiting with you and talking with you about the success that Garrington and Baker-Garrington have had as a, in our industry. I do believe our industry is growing, and it's growing by leaps and bounds. And so I think, my heart is that we need to keep educating. We need to keep growing brokers to be better at what they do and force us to be better at what we do, because as brokers get better, we need to get better too. And so I'm excited about that. I can't thank you enough for Baker-Garrington come alongside us again this year and being the co-sponsor for the Commercial Loan Brokers Association down in Orlando. Don't forget, folks, we'll be down there the 27th, 28th, and 29th of October, so we look forward to seeing you there. But Bob, thank you so much for taking the time to spend with us today. Ladies and gentlemen, this has been Bob Baker with Baker-Garrington and Terry Luker with DealTalk. We appreciate your time this afternoon.
Thank you.